Welcome back. You're watching the Small Cap Show, and in fact, now we're putting the spotlight on a Chola investment and finance. The company has posted its first quarter earnings. At the face of it, it does look like a healthy quarter. And to discuss the performance in detail, we are being joined by Arulselvan, EVP and CFO, Chola Investment and Finance. Welcome to the show, sir. And the first question to get this conversation started, that it's been a decent quarter for you, with the PAT growth of a good 12%. You had the top line growing again a good 20%. What really worked well for you this quarter, and have the results really met your expectations, your internal set of expectations that you might have had?
Yeah, we have grown our book because we had enough liquidity, and the other important factor is that we are into multiple products within the vehicle finance basket itself. Like we are into heavies, lights, mini lights, cars and MUVs, two-wheelers, tractors, construction equipment. So what happens is, while certain parts of this auto segment is not growing, we could still leverage the growth in the rest of the segments. Apart from the product segmentation, we are also across geographies, pan-India. We have almost 1,000 branches, and down into the rural, almost 80% of our branches are in the rural. So we could leverage on this geographical spread as well as the product spread, which keeps us going in spite of the tough scenario out in the industry. So while heavies have degrown, we have been able to grow the rest of the portfolio. More importantly, in the used segment, which also sort of will improve our yields in the quarters to come by. The only area where we need to further relief is from the cost of fund side, because the cost of fund is continuing to be higher with the banks not reducing themselves, and we are not able to tap too much of the money market side because there are not much issuances on the NCDs. So that is still playing a little bit tough on the NIMs as well as on the profits. But I think as we go by, we expect these NIM and profits to improve in the coming quarters.
All right, Mr. Arulselvan. Now coming to the disbursements, in fact, the overall disbursements for you registered a growth of 22% when compared on a year-on-year basis. In fact, and the key contribution to your overall disbursement growth is coming in from the vehicle finance segment, which registered a growth of a good 21% on a year-on-year basis. How sustainable is this, and going forward, given the kind of backdrop for the auto space, and if you could give us a breakup of the kind of contribution that is coming in from this particular segment?
See, the growth has been more in the light commercial vehicle and the cars and MUVs as well as two-wheelers. These segments, we are having a very small base, so we could quickly catch the market, especially in the north and west part of the country, because in these geographies, many of the players have not been able to sustain the growth because of the liquidity concerns, as well as their focus being shifted from disbursements to collection as their asset qualities have taken certain amount of beatings. So this has helped us to capture markets in the north and west in these product segments. We have degrown on the heavies because the industry itself has degrown a bit. So we have also not pursued the heavies, because one hand heavies also tend to be of low yield, and so we with a higher cost of funds, we are not able to accommodate such low yield products, and we want to shift our focus on high yield products like tractors, like two-wheelers and used business. And used business generally starts off when there is a degrowth in the new business and the heavies, and that's what we are capturing and we are riding our growth on.
All right, Mr. Arulselvan, one final question. What is your assessment of the current liquidity scenario on ground, and how is it impacting you, given the kind of disbursement growth that you've posted? And obviously certain segments are in fact contributing to the kind of performance, but sustaining this kind of a disbursement growth will be challenging going forward.
So liquidity is available. Liquidity is available with banks to good names, credit-worthy names with good corporate governance and good, transparent reporting and transparent operations. So from that perspective, we have a good amount of liquidity. Liquidity is available with the overseas players. RBI has relaxed the ECB norms, and we have tapped the ECB market. There is possibility to tap more, and we are working on such, avenues to grow our funding requirements, to satisfy our funding requirements. The only place where we have a liquidity crunch is in the mutual funds. Even in the mutual funds, the liquidity is available on the shorter end of the curve. The mutual funds are little bit apprehensive about redemption pressures, and so they are not right now locking themselves with long-term lending. So NCDs of longer tenor are not available, but CPs are available plenty. The rates have come down. So I think liquidity for the right player should not be a challenge in this current scenario.
All right, Mr. Arulselvan, thank you for sharing the details of your performance in Q1. In fact, the key factor to highlight here is, of course, the kind of disbursement growth that the company has posted for the first quarter. And most importantly, the key contribution to the overall disbursement growth is coming in from the vehicle finance segment, which registered a growth of a good 21% on a year-on basis. As Mr. Arulselvan just pointed out, it's a diversified nature of the portfolio that has in fact helped them scale this kind of a disbursement growth despite the muted backdrop. With that, we completed our time on this edition of the Small Cap Show. Thanks for watching. Lots more lined up on the other side. Stay tuned.